Hello, today is Friday, September 16th, 2022. It is 2:03 during the market session. We rarely do this, but want to get this out to you. The weekend report title is The Stock Market Hit with the Trifecta, and this is your market report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, we are trying to keep our clients aware of what is happening, the moves we made, and what we're seeing. Okay, so this is, let me update this real quick. Again, the market is not closed yet. This is in the session, but it's an ugly week. During these periods, I go to cash. It's very, very simple, and I'll show you why. The issue has never been to the downside for me in protecting assets. It has been to the upside, missing the full rallies. We know that. That's what I'm trying to improve upon. So I'm just being real with you, as I always will be. This is something where I need to improve to say it's ugly right now, but where could be a key level that I want to buy. So as you can see, S&P 500 is down 5.41%. As of right now, we actually do have a gain for the week. So we took a quick shot at the close on Tuesday, MOC order, which means after the close order, after the big CPI down day of 4.32%, the S&P 500. We gapped up and lost it all. Actually, it did rally that day into close, but then you can see it's just been brutal and ugly. So you're getting the complete opposite of what we had last year. The Fed is tightening, and into this CPI report, and I'll show this to you. Into the CPI report, you can see that we had a huge rally going into it. I believe that this is, I call it a sell the news event, where we got overbought. The news didn't improve at all. It was just a huge squeeze. The trend is still down. The S&P 500 200-day, which is a long-term trend, is down. The 50-day is trending down, this blue line, and definitely the 5-day is going the wrong direction. So the key level that I was watching today was the S&P 500 3850. That's exactly where we're at right now. And short term, this is the medium term to kind of show you the different lines and so on. So we have some huge gap downs that will eventually get tested. But we did fill this gap up, which is good. Would not surprise me for us to eventually test this one, and that could be a good thing. A lot of gaps, again, as I always say, gaps like to get tested. The put call ratio is very, very high, as you can see. This is as of close of yesterday, 0.73. The reality is this: we are in a downtrend. Respect it. Do not feel like you need to be in a rush to get in quickly. And if you do, view any trade as a falling knife. So I'm not going to be adding 100% at a key level. I'm going to be adding 25, 33% at a key level as a knife catch. Anything below the 5-day moving average, and it is trending down big time, this orange line. Let me clear this up so you can get a clearer view. The orange line here. Okay, the orange line, we are below a 5-day moving average. Are we a little bit extended to the downside, an extension below the 5-day moving average? The answer is yes. So objectively, this could be a bounce spot. Where I would be very interested in buying would be in this area, the 37.86 to 38.17. I'm not going to time this perfectly. Never will. I've got to get over that and improve and take some knife catch shots. Now, what I do need to get better at is adding at key levels. So if we test 38.17 down here, right here, okay, and regain a key level, and I'll show you the key levels right over here to the right, get above 38.87. If we maybe test 3800 and get back above 3850, I think that's going to squeeze the crap out of this market and it just goes higher. Okay. At this point, it is all about positioning. It has nothing to do with the news. The news, we got hit with a trifecta, and by that I mean quad witching, which means a huge rebalance in funds. So a lot of times, if like an Apple per se is overweight and doing well, that index is going to rebalance, and often Apple gets hit and rebalances to another stock that was lower performing. Okay, so that's quad witching in a very, very basic definition. Seasonality is terrible. We know this is what I've been talking about. Eventually, this is going to go off this chart and it's going to squeeze and leave everybody behind. Could we see new lows this year and new highs? It is definitely possible because everybody is short right now. And once we regain a key level, again, what I mean by regaining a key level is saying, so I don't like the way this is reacting at 38.50. I want to see a quick bounce. In short term, are we seeing that quick bounce? The answer, once I can find it, is no. The answer is no. 38, number one, here was the danger area. Once we broke out, it went a lot higher. Once we went below, it went a lot lower. So really, we're just going back and forth at 39.70 to 39.20. We lost that level. It's not a good look. So the tricky thing in what I've learned over time is in my learnings, and it's a learning process always, is you don't want to see sideways movement in a downtrend. In a downtrend, when you go sideways like this, it gets us out of oversold. Okay? So it gives us little upside to the upside potential. It doesn't mean this won't go higher. It just reduces your odds. So everything is risk reward. Okay? I'm taking shots at key levels. Right now, I don't like the way this is looking at all. I will, if this closes ugly, like if we close on a huge sell-off, which could happen because that's often what happens with quad witching. If this sells off big time, I will probably add a 25% to 33% addition just to force getting some in, because risk reward is not bad here from an oversold standpoint. Doesn't mean it's the bottom, okay? But you can see here's really the trend. The overnight, it shows some of the overnight. And we're not oversold, even short term. We're not oversold on a day that is down 1.41%. So on a week, when you have a week that's this ugly, 5.56% down, and you're not oversold short term, you can kind of see what I'm saying. That's not good. That's not a good thing for bulls. So risk reward is not really great to the upside, but one thing that could save bulls or going to the upside is this chart. And I'm very aware of this chart. You can see that this is pretty oversold down here. Okay. This is more of a weekly time frame. It doesn't mean it can't go lower. Like periods like this was ugly and it can definitely go lower. So seasonality is ugly. And the third, the trifecta. So we talked about quad witching. We talked about seasonality. We talked about a bad CPI data. Going into the meeting, everybody was saying, gas prices are lower, gas prices are lower. I think the media kind of caused hey, this could be, a lower than expected CPI, and we just rally. Well, the problem is it rallied about 6 to 7% into the meeting and got us into a bad overbought condition way up here. So that was this week. Monday, we were even gapped up overnight into Tuesday before the meeting, and boom. Okay, so it's all risk reward. This is why I did not add into the meeting, is because we were already way overbought. Now we are trending in a downward position. It's staying there. When you don't get bounces off key levels, that's not a good sign. However, we will be taking shots because even if we added here and it went lower, this would be good things for long term. So everything's risk reward, but I'm glad I've been in cash this week. So overall, I wanted to show you a few things in addition to what I just showed you. Sectors for the week. When I say, when the market goes down, everything usually follows it. This is living proof. Now, the areas, the more conservative areas like healthcare, staples might do better, but it's still ugly. They all go down. Don't fight the trend. The trend is down. Most stocks will follow suit. Okay, so that's what we believe, and history has proven that. The core, the big boys, the core 10, the biggest 10 positions in the S&P 500. Let me update this. I bet Tesla might be a little bit higher. Yeah, so Tesla's really the only one holding up here. The rest, when you see this and these make up 25, 23% of the index going into quad witching when they're probably going to get rebalanced, it's the trifecta for disaster: poor CPI, poor seasonality, and quad witching. It is, don't fight it. Could this provide great opportunity next week? Yes, especially if we gain a key level. I will leave it at that. Probably went a little bit more than I should have, but I hope this gives you some comfort that, number one, we were in cash this entire week, added a little bit, so we did have a positive week, and that's difficult to do, getting long at a time when the market's down 6% in a week. So the VIX is still ugly. No real news here. So overall, this will provide opportunity in time. So understand that I'm going to have to take shots. That is where I've not done well in the past, and I'm not going to continue to make the same mistake. So any shot that I take, I keep the downside to 12 points. So if I get in at 3,800 and it goes to 37.87, that's my stop. Okay. So I keep things very, very small until we can get out of this. Everything is a knife catch at this point until we can regain a key level, and that key level will be right around 38.87. We get above there, it squeezes, gets all the shorts out, and it leads to very interesting things. So overall, not seeing it yet. Again, this could change big time in the next hour and 45 minutes. That's in the last 10 minutes, the last 2 days, it has moved about 0.8 to 1% on nothing but squeezes. So that could definitely happen. I may have to react, but if it rallies into close, I'm really not interested. If it dies into close, will become more interested. So stay optimistic. This will lead to good things. The economy is not looking good. However, the market will fool you every time you start believing economics. The market, as we've talked about, is 6 to 8 months ahead. So right now, I think we're seeing a big, ugly portion of it. Could it go lower? Could we test the lows here? Would not surprise me eventually, but probably due for a bounce pretty soon here. So overall, I'm not catching a falling knife. I'm trading very disciplined, and downside has never been an issue. So I need to slowly start adding. It's not going to be fun. You're going to hate me for it, but eventually it's going to lead to good things. But I'm keeping losses very small at this point. So even that gain that you saw here, it went below that level and I took the gain. So we can still make money in this environment. You just have to keep losses very, very short, small. So have a good weekend, and we'll keep you posted. Thanks, guys.